Everything you're about to hear is for education and entertainment purposes only. Whilst we are licensed, we're not aware of your personal financial circumstances. Any advice is general advice. Equity Mates operates under Australian Financial Services Licence 540697.
Equity Mates!
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast where we explore what's possible in the world of investing. If you've just joined us for the first time in 2025, a huge welcome. And if you're a returning listener, welcome back. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you?
I'm very good, Bryce. Very excited for this episode. Very excited for this year. We are back from our summer break.
Yeah.
We are into the 8th year of Equity Mates.
Crazy.
Is that right?
That's crazy. Yeah.
19, 20, 21, 22, 23, 24, 25. Ninth year of Equity Mates.
Wow.
Yeah. Still learning.
Still
got more to talk
still
about.
Going. Still doing bold predictions.
Yeah. So this episode, as we always start the year, we do bold predictions for the year, what we think is going to happen in 2025. And we're each going to share our stock of the year, a competition that has been running for about 8 years now. But before then, how was your summer?
Summer was good. Obviously kicked off with your wedding.
Yes.
Which was
I got married.
Awesome. Yeah. Congratulations.
Yeah. Thank you.
How does it feel? What are you now, 1 month in?
A bit over a month. We actually didn't celebrate our 1 month wedding anniversary.
You don't do monthly anniversary celebrations?
No.
How's the bling?
Yeah, it's good.
Used to it?
Pretty generic.
Yeah.
It's pretty funny going to the jeweler. The blokes Alice got, cases and cases of options.
Yeah.
And then I was like, all right, so for your choice. And they had this tiny little box that they opened. And I was like, you can choose like 3 different sizes, 3 different roundnesses.
Yeah.
And then silver, rose gold,
like
or normal
brushed
gold.
or whatever.
Yeah. And that was about it.
Yeah.
So pretty easy
no
choice
red carpet
for me.
the guys.
Yeah. But no, it was great. It was a lot of fun. And
it was awesome.
The wedding was a lot of fun.
Yeah. And then I spent Christmas down in Kiama with Harriet, my wife, and her family, which was really nice. Got some beach time. New Year's back here at Equity Mates HQ.
Yeah.
Yes. Cracked the dome. That was fun. But it was a nice break. But a lot happened when we were away. That's for sure.
In the news?
Yeah.
To be honest, I switched off.
That's good.
Yeah.
So mine was good. How about yours?
Well, yeah, it was great. We got married, had a little honeymoon up to Palm Beach, then rolled straight into Christmas. And then had a couple of weeks off in January, which was nice. So, yeah, no, it was good. Yeah.
Refreshed.
Ready to get back into it, though.
Yes.
Yeah. It's going to be a big year here at Equity Mates, I reckon.
Big time.
Yeah.
Can't wait. So, before we jump in, as always, we start the year with a community survey. And we love doing it because it gives us insight into what you guys are really enjoying about Equity Mates, where you would like us to improve, the content that you like, the channels that you're engaged in, the content thematics that you want us to unpack more of. So that is now live. The link is in the show notes. It closes on the 9th of February, so there's a few weeks, but please get in there and fill out the survey because it really helps us plan out the next few years here at Equity Mates.
Yeah, I think the call out is if you find what we do valuable, if we've helped you in any way, this is the way that you can help us. So please spend 5-10 minutes completing this survey. Well, the links will be wherever you consume Equity Mates for the next few weeks. But it really does help. It helps us decide what shows we're going to do. It helps us decide what content we're going to do within those shows. So yeah, please give us a hand and help us make 2025 the best year yet.
That's it. And if you complete it in full, you will be eligible to win $500 in cash. There's a question right at the end that is to do with that part of the survey. So make sure you complete it in full, and we can't wait to announce the winner in a few weeks' time.
All right. Well, Bryce, as I said, this episode is how we always kick off our years. Bold prediction and stock of the year.
Yep.
We'll start with bold predictions. And I think we want to preface this part of the conversation with bold predictions is something that every finance media brand will do at the start of the year. Every podcast is out with theirs. Bloomberg is out with theirs. The AFR did theirs. It's ubiquitous at the start of the year.
Yeah.
You got to take them with a grain of salt, because whatever you believe, you can find an expert that agrees with you. And we've pulled out a few examples from the 2025 rounds of bold predictions to illustrate that point. Nvidia, hottest stock. Obviously, a lot of predictions center around Nvidia. Scott Galloway predicts that Nvidia and OpenAI will have a banner year and become a technology duopoly, whereas Michael Batnick has predicted Nvidia will disappoint on an earnings release and the stock will close down more than 10% in one day, something that's never happened before for Nvidia. So whichever side of the Nvidia debate you're on, you can find an expert who agrees with you. S&P 500, Bank of New York, Bank of America, both predict another double-digit year. The AFR predicts the S&P 500 won't repeat the success of 2023 and 2024. Again, wherever you sit on the debate, you can find someone who agrees with you. Top performing markets for 2025. Deutsche Bank has predicted the US. Scott Galloway has predicted emerging markets. So again, it's just, wherever you sit on the debate, you can find someone who agrees with you. So with that run in, the question is, why do we do it?
Yeah.
And the answer is, the predictions themselves aren't the reason you do bold predictions. It's the thinking that goes into the predictions, the way you organize the information about the world around you and think about where that might lead that is valuable.
Yeah.
So for all of our predictions, we're going to have a bit of a spiel about why we think that's the way they are. And that's probably more valuable than the actual predictions themselves.
Yeah.
All right.
Let's do it. So we're going to start with Aussie stock market. And then over the summer break, we reached out to the Equity Mates community on our Facebook page. Make sure you come and join us there to get their bold predictions as well. So to start with the Aussie market, one from Justin White is he reckons BHP will hit $50 or more. Tony Biswas, he says that we're all going to make $1 or $2 on resources and healthcare. Both are looking cheap and unloved. He thinks they'll be similar to the banks this time last year, so keep some powder dry. And then Michael Sims reckons Fortescue will gain 60% in the calendar year.
Crazy to think that.
Yeah.
You have to be so bullish on China.
Huge. Yeah. So those are from the community. Let's start with ours. Who wants to go first?
You go first.
Okay. So as Tony recognised, last year was great for banks.
Yeah.
Not so great for the resources and mining sector. To illustrate that, the banking index, or Australia's financials index, the XFJ, was up 29% in 2024. The resources or mining index, XRJ, was down 18%. My prediction is that mining will outperform the banks this year.
Yeah.
And the factors that will lead to this: weak Aussie dollar, great for exports. Fund manager rotation. There's a bit of noise at the moment about a lot of fundies moving out of banks and into some of the more unloved areas of the market just because of bank valuations. Perhaps a huge China stimulus, which I'll get to later. Solid gold price and lithium potentially rebounding. If all of that plays out, I would expect mining sector to outperform the banks. And that's not to say the banks don't perform well, but I just think that it's time for the mining sector to get back where it belongs.
Okay, nice. All right, well, my bold prediction also includes the banks. My prediction, I think, is counter to what a lot of experts are predicting. I'm going to say the big four banks end the year higher.
Wow.
Now, it's the question that has really stumped most active stock pickers over the past 12 months, the valuation of Australia's major banks. People just cannot get their head around it. CBA especially, what it trades on, price to earnings, price to book, compared to the best banks globally, it's just out of sorts. And I think this is the year we realize that asking the $4 trillion superannuation sector to be index huggers, which is what we've asked for some of these super reforms lately, is going to create some price-insensitive buyers, especially at the top end of the ASX 200.
Yeah.
We've been asking, why is it that these banks just keep growing and people keep buying? A large part of it has got to be the super industry buying. And I don't think that's going to change. So, the AFR has predicted the big four banks will underperform. A number of fundies are predicting that there will be a correction in Aussie banks, but I just don't think there will be enough selling pressure to outweigh the buying pressure.
Just makes you think long term about that and the impact that super has
Yeah,
over the next 10 years.
Yeah,
you could just make the thesis could be that there's just going to be such a large pool that is only going to be exacerbated in 10 years' time.
Yeah. That is, yeah.
It's unbelievable.
All right, so that's Aussie stocks. Let's move on to the Australian macro predictions. Justin White predicted in the Facebook discussion group inflation back to 4% in Australia and the Aussie dollar to 60 US cents after poorly timed interest rate cuts in the next 4 months. We're pretty close to 60 US cents now. Yeah, that will be one to watch. All right, what have you got macro-wise?
Look, I've just gone with Australia's. We had a pretty sluggish, almost a flat GDP growth last year, only held together by government spending.
Yeah, and in immigration. Yeah.
Can't see that changing anytime soon. A lot of pressures on the RBA to cut rates, but contrary to what a lot of people think, I think they will wait until the very last minute this year to cut. So I'm just going to say one rate cut late this year to try and reinvigorate what is probably still a very sluggish economy. Okay,
well, I'm going down a similar path to you. I have also done a prediction around rate cuts, and I've just said no rate cuts before the election.
We don't know when that is yet, right?
No, it'll be before May. I think it has to be before, yeah.
Yeah.
The AFR is predicting the first rate cut in the second quarter of 2025, and the market is pricing a 2 in 3 chance of a rate cut at the first RBA meeting in February. So that's kind of like where the predictions are. I don't think that's going to happen. And the reason I don't think that's going to happen is the currency. So the Aussie dollar currently buys 62 US cents. That's down 10% from October when it bought 69 US cents. Outside of COVID, we're at the lowest level since 2001-02. When it was in the 50s, when one Aussie dollar was buying, 51, 52, 53 US cents. Now, if we cut rates, the Aussie, investing in the Australian market is less attractive relative to other markets as you cut rates. That would then put more pressure on the Aussie dollar, see it fall further, which would be highly inflationary for the import-based economy that we are here in Australia. The RBA don't want to see more inflation, and so I think they're going to be very reluctant to cut rates while the currency is so weak.
Michelle Bullock's probably just like, no.
Yeah, I know.
Are you kidding me?
So I think in order to protect the currency, I think the RBA will hold for longer than most expect.
Yeah.
And I think it may end up being a rate decision that will change the government. But that's not my prediction.
Okay. You're saying because there won't be one before the election,
I think the
trend of governments who have gone through the cost of living crisis and getting booted will play out here in Australia.
Yeah, I think there's a lot of hope in an RBA rate cut or two pre-election to be like, you see, our economic management is working.
Yes, yeah. Okay, nice. You wouldn't want to be traveling this year at the moment, that's for sure.
Yeah.
Because it's not only falling against the US, it's falling against a bunch of other major trading currencies as well. Tough to go to Europe. Let's move to global macro. James Gage from the Equity Mates community, he says Trump and Musk to not have a falling out.
Yeah.
We'll see.
No, we've got no Trump. Oh, actually, my prediction does kind of involve Trump. All right, well, why don't I go first here?
Okay.
So my prediction stays on the interest rate conversation, but we're moving over to the US now. I say the US 10-year yield crosses 5%. And then Trump tries to intervene or tries to force the Fed to intervene to lower yields.
Okay, interesting.
So to explain that, the story of last year was rate cuts.
Yeah.
And in the US, in September last year, we finally saw movement. So September saw a double rate cut, 50 basis points. And then there was another 25 basis points in November and another 25 basis points in December. So we saw 100 basis points of cuts between September and December 2024. But in that time, so from the 16th of September, the US 10-year yield bottomed at 3.6%. It's now 4.65%. And so to explain that, what we're seeing is a divergence between the monetary policy or the rates set by the US Federal Reserve, where they cut 100 basis points, and the way that the market, the bond market is pricing US debt, we've seen that actually increase 100 basis points. So we've seen a 200 basis points divergence in 4 months. Now, why is that the case? While the Fed is cutting rates to try and stimulate the economy because, they've sort of seen inflation come back into target, the market is worried about longer term inflationary pressures, and they're also worried about the size of the US government debt. So they're demanding a higher return to lend more money to the US government, which is why yields are rising. And what we're learning is that bond yields kind of matter more than the Fed funds rate. Mortgage rates have gone back up past 7%. Borrowing costs on the US government debt are more affected by bond yields, by the government bond yields, obviously. So that's going to increase. Growth stocks, I think, are going to have a pretty tough year if yields keep rising. But 5% is the psychological threshold.
Yeah.
So yields didn't quite get to 5%, but they're getting closer. The last time we were at 5%, the US was above 5% for the 10-year, April 2007. So there's been like a generation of investors and a generation of politicians who haven't seen yields above 5%. And I think if it gets above that psychological threshold, stocks will sell off.
Yeah.
Trump is going to find it harder to push some inflationary policies because that's only going to push yields up further. Mortgage rates are going to increase, and that's going to really seize up the US housing market more than it already has. Businesses are going to face higher borrowing costs. And I think that would prompt perhaps some unprecedented political intervention
Can
in
you
the
imagine
market.
the Truth Social posts coming out about from Trump about Jerome?
Yeah, put it this way. If yields get above 5%, you wouldn't want to be the Fed chair.
No way. No way.
So
nice. Good prediction.
I think that's going to be probably the most important indicator. Because, that's also, for us here in Australia, if the US 10-year keeps rising, that's going to keep putting downward pressure on our currency as well.
Yeah, absolutely.
So I think it's going to, where the US 10-year goes, almost everything else in the global economy is going to be affected by that.
Yeah. Nice. Good one.
All right, what have you got?
My macro is 2 parts. I've said that there'll be so this is quite against consensus, but I'm going to say no US rate cuts and a larger than expected China stimulus package.
Okay.
As I said, contrary to consensus, I think across Wall Street, the sort of average expectation is 2 rate cuts from the US Fed this year. I think that the US economy will prove to be hotter than expected. If Trump can get some of his deregulation policies in play sooner rather than later, we'll start to see some, activity come through from that point of view. And it'll prompt policymakers to put any plans of a rate cut on hold. Whilst inflation, I think just overnight at the time of recording, came in a little bit lower in the US, it's still sort of a little bit higher than it needs to be. So I'm going to say no US rate cuts. On the other side, though, in contrast, China is seriously under pressure internally in terms of economic growth. We saw a large stimulus package last year that I think underwhelmed many investors. It's meant to play out over the next 5 years, but I anticipate that they will come again with another stimulus package this year exceeding $1 trillion, aiming at restoring domestic and global confidence. And that kind of flows into my first prediction. If that does happen, then you can expect they'll be trying to increase, steel manufacturing and all of that sort of jazz that will flow into the miners here. So that's what I'm going to go with.
Yeah, nice. To put a number that I saw recently on the scale of China's economic problem. So the value of unsold homes in China, 6 trillion yuan, which is the equivalent of 1.3 trillion Aussie dollars. Yeah.
Yeah.
It's just like their housing market is still so
cooked.
Yeah.
Which is why I think they have to do something about it.
Well, they're trying.
Yeah. And so they came out last
world's
year.
largest asset class, Chinese residential real estate. And like similar to Australia, there's such a wealth effect in China. Like so much of people's wealth is tied up in property. And then as this housing market has collapsed, now there's massive unsold homes, massive unfinished buildings. It's just seized everything up.
Yeah.
All right, fourth category. This is our final financial category. Then we always close it out with an AFL prediction. Global stock prediction.
Yeah, all right, I'll go. There'll be a 20% drop in the S&P 500 at some point throughout the year.
Okay.
Yeah. So Trump's coming into office. He's inheriting one of the most overvalued stock markets in history, or as he would probably say it, one of the best performing thanks to him. But it feels like conditions are ripe for a shakeout. All of the predictions at the moment from Wall Street are that we're going to see sort of 10 or 12%. That's kind of general consensus. That might happen, but I think throughout the year we're going to see a market correction. But why will this happen? I think there could be a few reasons. Firstly, it could be triggered by disappointing results from tech, particularly NVIDIA. I like the prediction you read earlier about NVIDIA disappointing. It feels like it has to happen at some point. And as soon as it disappoints, it is going to get sold off hard. So it could be that, and then that would prompt investors to rethink the whole AI hype. If the Fed Reserve do change course, then that could lead to a sell-off, or we could actually see, as everyone is sort of waiting to see how it plays out, escalating tensions globally that lead to a pretty intense trade war that is sparked by Trump and the tariffs he wants to put on around the world. So who knows, but with valuations where they are, we should expect some sort of a sell-off this year, but I'm going to say we might see 120% or more.
Nice. Now, that shouldn't be a reason for people not to start investing if you're new to the podcast.
No.
Because in America, you'll see a 20% fall in the stock market. You'll get, on average, maybe one every 5 years.
Yeah.
And despite that, over the past 100 years, the S&P 500 has returned about 11% a year.
Yeah, and the speed of recoveries these days, as it kind of feeds into your superannuation. Like the speed of recoveries is alarmingly fast.
Yeah, we had a 20%. We had a greater than 20% fall in 2020. We had a greater than 20% fall in 2022, and yet from the start of 2020 to now, you would have more than doubled your money in the S&P 500.
So what about you, Ren? What are you going to do? Global stocks?
So I'm maybe stretching the definition of stocks, but I think it's play on. So my prediction is Starlink will quadruple in size and be larger than Telstra. So Starlink, for those...
in the next 12 months?
Yeah.
Okay,
so
nice.
Starlink, for those unfamiliar, is the satellite internet provider that is run by SpaceX. SpaceX have the fleet of low Earth orbit satellites that provide internet around the world, quite famously to the battlefields in Ukraine. They are a global internet provider. They offer internet in more than 100 countries. Alice's parents, who live on a farm out in Forbes, they have Starlink. Like it's everywhere now.
Yeah.
So as of December 2024, Starlink has 4.6 million customers. Australia's largest telco, Telstra, has 22.5 million customers. So they're the numbers.
That's crazy.
They're the numbers I'm playing with. If you look at Starlink in Australia today, it's about $139 a month. In the US for residential, it's about $120 a month. So it's not cheap, and it's not really price competitive with local telcos. For example, Telstra's essential internet plan is $70 a month in Australia. But the reason it's hitting in regional areas is because Telstra and Australian telcos suck in a lot of regional areas, especially the satellite offerings.
Yeah.
But that price disparity isn't universal, and I think this is where it's really interesting. There was a report in Rest of the World that had a look in Africa. So 16 African countries, Starlink is available. In 5 of them, a monthly Starlink subscription is cheaper than the leading fixed internet service provider, and in another 2, it's borderline. In Ghana, Starlink is about half the price of the local internet service provider, $33 a month compared to $71. In Kenya, it's about $10 compared to $23. Stories similar in Zimbabwe, Mozambique, and Cape Verde, and it's slightly more expensive in Botswana and Zambia. I think that is the story that's going to play out in more and more places around the world. In Southeast Asia, Indonesia just became the 3rd Southeast Asian nation to allow Starlink to operate after the Philippines and Malaysia. And I think the story that is going to emerge this year is Starlink is going to connect a lot of underserved, or places where the internet is quite expensive, regions. They're going to connect them to the internet. And I think it's going to be a really interesting story to see how that changes these countries and what it can mean for economic development. To give you a sense of how underconnected Africa is as a continent, 38% of the population of Africa use the internet compared to 91% in Europe. The transformational effect that Starlink will have won't be seen in the Western world. It won't be seen in Western Europe, the US or Australia. We'll all see it in time, I think.
Nuts.
Yeah.
It's going to have to slightly more than quadruple though for your.
Yeah. Okay. Well.
So it'll be bigger than Telstra.
A quintuple.
Quintuple.
Yeah. It'll be bigger than Telstra is the prediction. It'll have more.
If that happens this year, that's unbelievable.
It'll have more than 22. It'll have more than 23 million customers.
Unbelievable. Yeah. It's it is pretty phenomenal what he's doing. Like you can definitely see that playing out over years. It's just like Elon Musk. He has just the amount of data that his companies are bringing in about everyone in this world is unbelievable.
By the time this podcast goes out, TikTok will be banned in the US unless something happens. Yeah. And the story that China may want to sell to Elon.
Yeah, that would be a nightmare.
We're going to have to speak about him so much this year.
I listened to a 5-part podcast series that really confirmed for me actually how much of a piece of shit he is.
What's the podcast?
It's called, it's by Torres Media and it's called Elon's Spies.
Okay.
And it's 5 episodes going into 5 different people's lives or stories about how he has used teams and teams of private detectives to like dig up dirt on people and like effectively ruin their lives. Right. And so like he's sent people that are whistleblowers at Tesla for safety concerns and those sort of things. He just completely ruins their lives, sends them bankrupt, knows that he can just effectively out-litigate anyone.
Wow.
And so just drives them to the ground. Has people followed, like all sorts of...
What's it called? Elon's Spies.
Elon's Spy.
Okay.
Spies, yeah. And I'm just like, this guy is a piece of shit.
Yeah, well, if anyone from Elon's orbit is listening...
Yeah. Stay away.
Bryce is the one that said that. No, that's interesting. I'll give it a listen.
Yeah, give it a listen.
All right. Well, look, we've still got our AFL predictions. And then we've got stocks of the year. But let's cover off AFL. So this is, traditionally we do it every year. Chris Wood from the Facebook discussion group has a prediction that I love to see. Sydney Swans make a comeback, win the premiership.
New coach, nah.
Brody Weeding. John Longmire won it in his first year.
True.
Anyway, Brody...
so did Chris Scott, I think.
Brody Weeding, Carlton 2025 premiers, Nathan Seaburn, Roos to finish top 10, Hawks top 4, Blues 9th. That would break the Blues' hearts. But Bryce, what is your bold prediction?
Again, I'm putting myself... I've gone a 2-parter again. All eyes are going to be on the Hawks this year. Last year, there was no external expectations. They had finished the year 3rd last. I did predict they would make top 8 because I think 2023 they had an awesome end to the season.
Yeah.
Last year was an absolute ripper. I think, though, that they're not going to be able to handle the heat. And they're going to miss the 8 this year. I also think there are some pretty strong teams that will likely replace them if they do finish in that 7-8 spot. They've had a pretty good trade period, but yeah, I'm just saying they can't handle the heat and miss out on the 8. On the other side, though, I think Collingwood rebound after a disappointing campaign last year, finishing outside the 8. They've had a really good off-season in terms of recruitment and that they return to the top, making the prelims.
Okay, love it.
Not going to say grand final because it's very hard, but I think Collingwood make the prelims.
Okay, so I've just got one prediction, and that is that the grand final hangover lives on. So we're living through a pretty weird streak since 2020. The reigning premier hasn't won a final the year afterwards, and that's unusual.
Yeah.
So Richmond in 2020, then 2021 they didn't make the finals. Melbourne the year after won it, and then they were out in straight sets. They lost 2 in a row. Geelong won it the year after, and then in 2023 they didn't make finals. Same with Collingwood. They didn't make the finals the year after they won it. Now, the premier last year was Brisbane. And so I predict in 2025 they don't win a final. And I think
I can see that.
It's easy to forget just how massive the effort was for the Lions to make the grand final and win it. They were 2-5 to start the season, 2 wins, 5 losses. Everyone had written them off. In the final against GWS, they were losing by like 44 points, and then they came back. In the prelim against Geelong, they were trailing, and they had to really fight to come back there.
But you can't discount even the 3 or 4 years leading up to that. Like they lost the grand final by a kick the year before.
Yeah. It's like so emotionally taxing.
Incredibly.
And so you come, and then like you get a shortened preseason and the competition's so even.
Yeah.
So everyone's pretty bullish on them. They're like short odds. They're like, top 3 odds depending on what bookie you look at to win it all again. But I'm going to say they don't win a final in 2025.
I like that. That's good. Yeah.
Well all right. Played. Well, let's take a break here. And then on the other side, we are going to be back with our stocks of the year for 2025.
Welcome back to Equity Mates. As is tradition, we kick off the year with bold predictions and a stock of the year. Now, in past, Ren, the stock of the year hasn't been one that we've had to have bought or that we've had in our portfolio.
Yep.
We've both just chosen stocks that interest us or we think would do well.
Yep.
This year, though, we're going to put our money where our mouth is, and it needs to be part of our portfolio. What we haven't determined is if it absolutely stinks, are we allowed to sell it?
Yeah, I think so.
But no, we put our money where our mouth is, which for me changes the dynamic a little bit because I don't necessarily want to be investing for the short term.
Oh, here we go. ASX 300 ETF. God, ETF, mate, strikes again.
And so with that in mind, I'm going to be actually doubling down on a position that's in my portfolio already, which is Alphabet.
Yep.
Yeah.
Nice. Boring.
No,
I don't mind this.
So there are a number of reasons. Over the past 12 months, it has underperformed a lot of its big tech competitors. Nvidia was up 134% last year, Tesla 80%, Meta 62%, which I also like, Amazon 42%, Alphabet was 33%, only beating Apple and Microsoft, Apple 27%, and Microsoft 7%. Pretty lackluster year for Microsoft. Still maintains number 3 in terms of largest companies though. So now they're facing a number of headwinds. I think they're under pressure from... Is it what do they call it? What is overseas to get rid of to divest and get rid of Chrome and
the Department of Justice,
DOJ. Yeah. But there are a number of reasons why I think it's good. Firstly, in terms of search, I don't know if you've seen AI overviews.
Big fan.
Love it. Yeah, love it. So that's kind of reducing the pressure on it or the expectation that ChatGPT is now overtaking people's search and people aren't searching on Google. YouTube remains as perhaps the best media platform going around, and they're putting a huge amount of attention on it. And it is positioned in all the hype areas at the moment. So cloud computing, AI, you name it, self-driving cars, it's all there. But I think most importantly, the valuation is pretty attractive given where it sits compared to its other tech competitors. It has a PE of 25. If you look at Tesla, it has a PE of 109, Nvidia 52, Amazon 47, Meta 28, Apple 38, Microsoft 35. So from a valuation point of view, pretty appealing. Being a long-term holder of it, it's done me well. There's no reason why not to double down on this. So that's what I'm going to be doing.
Nice. Interesting. Well, I actually was thinking about Alphabet, and then I decided that it's a bit too boring. So, but no, I think that's a good one. I also own Alphabet. Anyway, I'm going in a different direction.
Good.
You're going for $1 trillion company. I'm going for a $1.5 billion company.
Okay.
Bit smaller. So I've got a bit of a run-in and a bit of a spiel. So I just got married in the central west of New South Wales. And so I thought I would... It was hot. It wasn't too bad, but it was hot. And so, I've got a soft spot for that part of the world.
Okay.
And this company is headquartered in Dubbo. It has operations across Forbes, Orange, Mudgee, West Wyalong. It's born in the central west. It's expanded beyond there. But, I thought that was appropriate given I've just been married there.
Yeah.
So this company was founded in 2002, listed on the ASX in 2020. It is founder-led, with the founder still owning 48% of the company. Since listing in 2020, its revenue 4-year compound annual growth rate, 47%.
Wow.
Its profit 4-year compound annual growth rate, 37%.
Wow.
A lot of that growth has been funded by acquisitions, but if you look at its earnings per share 4-year compound annual growth rate, still 22%. What's more, the company trades on just a 21 price to
Wow.
earnings. So the company is MAS Group, MAAS Group, ASX ticker MGH. Have you heard of it?
No, never.
So it was started by Wes Mass, who was a former rugby league player, played 2 games for the Bunnies.
Yeah, yeah.
He started it in 2002 with a single Bobcat and $14,000 and just grew it from there. Listed on the ASX in 2020 at around $500 million market cap. Now it's worth about $1.5 billion. So pretty incredible growth story over the past, 23 years. What it is a construction materials and equipment company. So its 5 divisions are construction materials. It owns a bunch of quarries and the like. Civil construction and hire. It's lent equipment to, like some of the Snowy Hydro 2.0, WestConnex projects, some of the big infrastructure projects down in Melbourne. It's got a manufacturing division, and then it's got a commercial real estate division and a residential real estate division where they are actually property developers. So you can sort of see it's quite vertically integrated from construction materials to construction equipment to actually construction projects.
Yeah.
A lot of its growth recently has come from acquisitions, potentially a little bit of a red flag. But to give you a sense of what the company is buying and its operations, it recently has completed a capital raise to buy 3 more businesses. Cleary Brothers, a construction materials and quarries business in Wollongong and Nowra. It bought a 75% stake in Capital Asphalt, which supplies asphalt and spray seal products in the ACT. And it also bought a large quarry west of Melbourne and 390 hectares of land surrounding it. So very regional focused and obviously very construction focused.
Nice.
So there's an argument that it's cheap and it's growing and it's just an interesting company to talk about. But I think there's also an interesting takeover story potentially playing out because 2024 was a massive year of construction materials takeovers. So probably the most notable was Boral being bought by the Stokes family's Seven Group for $1.9 billion. But then Adbri, which used to be Adelaide Brighton Cement, they got acquired by CRH, an Irish company, for $2.1 billion. And then CSR was acquired by a French company, Saint-Gobain, for $4.3 billion. There's not many construction material players left on the ASX at the moment. And so potentially people are looking at the tailwinds of, we need to do, the government is trying to stimulate the economy with massive infrastructure projects. At the same time, there's huge pressure to build more housing really across the country. And people look at these construction industry players as potentially the big winners from just that big spending. And so would it surprise me if Wes Mass decided that he's almost a billionaire and he sells to private equity? I think he's worth $800 million now.
Yeah, well, if he owns 50% of a $1.5 billion company, shit.
Yeah, so that's the stock.
Love it.
Yeah.
Love it. It does actually ring a bell, and I've just Googled it. I remember reading about that capital raise at some point last year. What reminded me was the rugby player too. I just love these stories.
Yeah.
Where it's you can have a second chapter in life.
Yeah.
And still just absolutely crush it.
The media absolutely love playing up that angle as well. Yeah. It's he played 2 games for the Bunnies, so but still 2 more than we'll ever play.
Exactly.
Yeah.
Love it. All right. Well, that's a great one to start, and we'll see how they both play out across the year. As we've sort of said, though, I think anything. Who knows what's going to happen this year? But you and I, at least from a core portfolio point of view, aren't going to be changing too much.
No. I think 2022 was tough, and then 2023 and 2024 we saw the US S&P 500 grow more than 20% in both of those years, which is unusual how much growth there was. And here's hoping we see another great year. Australia's had some good years and some big winners in that time as well. But we shouldn't be surprised if things get a bit choppy, but we shouldn't be scared as well because that is normal, that is natural, and it's the long-term wealth creating power of the stock market that should get you excited and have you stay in the course.
That's it. So if you've just joined us for the first time, stick around because we'll be unpacking our investment strategies, what's interesting us. We've got plenty of new segments and returning favourites to get going over the next few months as well. We do hope that you enjoyed the summer series. Thank you for everyone who tuned into that and to the experts who joined us. But Ren, it's good to be back.
Yeah, and one final reminder, can you please fill out the survey? The link will be in the show notes or the YouTube description. It really does help us. It'll be open for a couple of weeks, and as an added incentive, you can win $500, but just do it to help us out.
That's it.
Yeah.
Well, that does us. We will be back on Thursday with returning favourite Andrew Brown for his bold predictions for 2025. See you then.
You have been listening to an Equity Mates Media production. In the spirit of reconciliation, Equity Mates Media acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. This podcast is intended for education and entertainment purposes. Any advice is general advice only and has not taken into account your personal financial circumstances, needs, or objectives. Before acting on general advice, you should consider if it is relevant to your needs and read the relevant product disclosure statement. And if you're unsure, please speak to a financial professional. The hosts of this podcast and their guests may have positions in the companies mentioned. Equity Mates Media operates under an Australian Financial Services Licence 540697.